is up, traders? Let me pull this music off real quick and let's get started now that I finally got everything situated. Sorry for the late start, but if you're new, welcome. This is the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. As you can see, Bitcoin is in a rising wedge formation. It is typically looked at as a bearish formation. However, it did make a fresh new year high today, and as you can see, that daily candle is absolutely disgusting. It's almost bearish. So literally, that was just a short sell attempt. Basically, we had some good news out for ADP job. The National Employment Report is a measure of the monthly change in non-farm. We have non-farm coming up tomorrow. We will be live for that as well. It's based on the payroll data of approximately 400,000 U.S. business clients. The release 2 days ahead of government data is a good predictor of the government's non-farm payroll report. The change in this indicator can be very volatile. So essentially, we've added 497,000 jobs. I don't see how, that would be bearish, but apparently it is. So, all right, with that, I missed that Bitcoin trade because I was not awake. I did attempt a long right here because it's the old resistance. Remember, if you watched yesterday's video that I put out, this is essentially a trap, a bull trap, if you will. Whenever you take out the low of the breakout candle, it's simply a trap. This move to the upside, I have no idea what that was about. I can't find any news at all that would have made such a move happen like that. So basically, the trade was stopped out. So that's the first one this week that I've missed on Bitcoin. All right, so with that being said, here is let's see here. There's your weekly open. I mean, boom, fresh yearly high, straight down. This move happened all today. It is absolutely disgusting. There you go. Yesterday, I thought we were going to be able to look for a short ride in this area. However, I was, just keeping an eye on it while we got closer to the open. It looked good, and then boom, it popped up. So that wasn't, once that happens, you got to leave it alone because your level did not hold. And now we're right back to that level. And it's probably not going to hold. This is a lot of sell. A lot of sell side pressure. Whenever you have a move like that and you liquidate swing highs, especially a yearly high, and then get an automatic bearish reaction like that, that is a bearish signal. So moving on, we'll probably be looking for short entries on Bitcoin, depending on if and where it holds. But I will keep you guys up to date. However, on the Forex front, let me do this real quick. Pull this up. Just bear with me right here. All right. So, at 9:06 a.m., it is currently 9:52 a.m. At 9:06 a.m., there may be a short here on pound dollar. This is the 2019 yearly open. You can see how it is acting as resistance. So basically, when we drop through, you can't really see it. Yeah, you can't really see it. I'll just go back and show it to you here on pound dollar. Dun, 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 dun. It is up on the day. However, right there is where I took the short entry. I was asked if I took the entry, and I said yes. So someone else took the entry, and now they have taken profits and moved their stop to break even. Essentially, what I got going on here is I might be wrong on my dollar direction. Based on some technicals, we will go over them today. But if that is the case, remember I said a few weeks ago in a live stream that if I end up being wrong on the dollar, then the best place to look for a short in order to get long the dollar would be the pound USD, because the pound USD has risen more than any other currency that is traded versus the USD. So this would be a good one to look for. And especially since if you look at this thing on a yearly or quarterly, you can see this thing just literally trends down forever and ever and ever and ever. All right. Remember, for the people that's been with me for a long time, they remember this area right in here. This white line was literally just brought up to me a couple days ago. Someone watched a video where I was talking about taking this short at this white line. I actually went on to Jordan Lindsay's Conquering the Markets channel that day that I took the short entry and explained to him why I took the short entry. And you can see basically, obviously, I didn't hold it. It would have been one of the greatest trades in my career had I held it. But you can see that this thing just went down and down and down for a very long time. But I just wanted to bring that up simply because I had forgotten all about it until someone went back in time and watched that video, and basically was like, everything that you called on this video is basically came true in the long term. And this was just one of the trades that I was mentioning on that. Simply what I was looking for is this trend line. It doesn't work off log. If you have lost your log button, let me see if you can even see it. Yes, you can. So if you've lost your log button, remember log used to be down here. It's right here now. You just click this and then you can auto fit to your screen, and then there's your log unlog. So that's where they hit it. If you can't find it, that's where it is. But anyways, it was based on this trend line. Essentially, like each quarter was unable to close above this quarterly resistance, which is also the 2018 yearly opening range. So hence the reason why I was looking for shorts in this area. And basically here we are. So if this is going to be a longer term move to the downside, this is quite a good pullback for that in itself. I actually thought that it would probably get back up there. Now that's only if I'm wrong on the dollar, right? That's only if I'm wrong. As you can see, this trade did work out to perfection, literally tagged that level and rolled over. So if you're new, make sure you subscribe, make sure you hit the like button, because you're not going to find accuracy like this on any other channel. It's literally that simple. Boom. So there it is. The dollar has moved up. I was looking for it to break down. It's still red on the day. So, it could ultimately break down here, but this is what we're looking at on the dollar. Let me go out here to a bigger time frame so I can see what's going on with that. All right, so yeah, basically it's just this candle's close, which is the yearly opening range. I don't know why it is. No, that's the yearly open. Sorry, this is the support made. All right, so Q2's open is what this is. But anyways, if you look at this on the daily time frame, you can see literally we've been kind of trending down for the year. Here's your yearly open. You made a yearly high, then you straight went down, made a fresh yearly low, came back up, made a fresh yearly high, then went a fresh yearly low. So you got a megaphone pattern here on the dollar. And then we traded back up here. Once we got above the 2023 yearly opening range, we wanted to see, A, do we get bullish continuation away from the level, or B, do we stay trading at the level for multiple weeks, couple weeks, and then roll back over? If that's the case, then we'll become bearish on the dollar. So every attempt that it has had so far to get back up above that yearly opening range has failed. So essentially what we're looking for is a breakdown below this thing here, and then we could potentially target this white line right there as the next move to the downside, because that would be literally just right here, right back down to quarterly support, and it would be a decent trade on Euro USD. I mean, you're looking at 589 pips there to the downside on the dollar. All right, so it doesn't look like it would be a big move, but if it does end up doing that, I would assume you would get continuation lower and ultimately go on to make fresh yearly lows. However, Jerome Powell said in the minutes yesterday that they are expecting a small recession, potentially. That's probably what's going on here. All right, anytime central bankers start to talk about recession, that does bring fear into the markets. You can see that happening today on Bitcoin. As you were up almost 3% today, you are now currently down. That would have been a fantastic short selling opportunity, but like I said, I was not awake when that occurred. So same thing here on the euro. What we need is we need a bullish breakout. A bullish breakout would help the dollar to break down, and then we could look for risk assets as well as Bitcoin to continue open. And this Q2 close would be a fantastic place to look for a retest if you do indeed get the breakout. So here, that would be a breakout above this little descending trend line. You can see, according to Q1 2023's close, you are wedging up. These are very, very, very important levels. So if we break down, guess what? We're probably heading right back down to test the 2023 yearly opening range, which means the dollar would go back up and potentially get above the yearly opening range. It has been a sideways market. This is the 2023's yearly open right here. You can see that it is slightly up. If you put a trend line under there and a trend line from this high to this high, you are trending sideways to up. This is what we expected for the majority of 2023. But there would be a potential bullish opportunity here if this were to break out. But you can see that it is absolutely having a difficult time breaking out. All right. So now, if I am wrong, we will flip the bias. It's that simple. I don't care. I don't love any one of these assets. I'm not that kind of guy on Twitter or YouTube that's going to hitch his wagon to a call, a major macro call, and then just ride it to the downside, right? If I'm wrong. That's not the way it works. You got to flip your bias. As a matter of fact, being a human, it's probably better if you approach trading without a directional bias. Watch the levels that I've taught you to look at. As long as you can watch those levels, price will ultimately tell you which direction it's going to go. You don't have to FOMO into it. You can wait for a retest of old resistance, or if it goes down, you can look for resistance acting as, or old support acting as resistance. And that's where you look for your moves. Similar to how we approached this trade today on pound dollar. Unfortunately, we would have been able to take this trade live. However, I was dealing with some other financial stuff with a brokerage company. So yeah, that got me sidetracked. So we got a late start. But that's what we're looking at here. Here's a SPY. It's down huge on the day. I mean, just puke. Let's go look at Riot, because it was brought up in the chat that a short on the open was a damn fine trade. And as you can see right here, where is the open? Where's the open? Where's the open? Where's the open? There's the open. So right freaking there. If you would have just taken that on the open right there, get short, and just hang on to it, because we don't know what's going to happen to Bitcoin. This is going to price itself much lower, more than likely, based on what happens with Bitcoin. So we shall see. But as of right now, I mean, I don't really see any reason to get long on Bitcoin. It's literally trading below any of the levels that I would have typically been looking for entries. All right, so there's nothing in here but wicks. There's no static level, right? Not on the weekly. There's nothing. There's nothing down here. So there's literally nothing to watch, right? The weekly open was it. That was the lowest level to watch. You got under it there. So there it is, right? So we'll currently have to just wait and see how this ends up playing out. But my opinion is it's more than likely going to be a short, seeing how it is a rising wedge formation. And if you did watch the video I put out either yesterday, it was yesterday or the day, I can't remember. I put out a video showing that there's daily and weekly bearish divergence, so that we could watch for that to play out. Now, on the daily divergence itself, all we needed to do is trade down to the 50 on the RSI, but we need that to be correlated with another level. So we do have a support level down here, as you can see, that literally held there, held there, held there. So if Bitcoin were to get down there, that would probably put it close to the 50 on the daily bearish divergence, and then we could consider that to be played out. However, on the weekly divergence, that would be a much bigger move, right? Much bigger move to get down roughly to the 50, but you can clearly see the divergence. This swing high is higher than this one, and that week closed above that week. So that's your bearish div right there. And it played out literally to perfection. People were simply watching that swing high right there. As soon as it got up there, they hit the sell button. And that is what is happening today. All right. I don't know of any bad news or anything. I've been scrolling through Twitter. I don't see anything that would literally be the reason for this to fall off. Yesterday we did have somebody from, let me see if I can find it. Apologize if I'm making you dizzy. Just look away. Look away. Look away. I can't find it. But it was Pompliano's the one that right here. So this is literally.
And also, I do believe the role of crypto is.
If you haven't seen that, it's Pomp. I mean, most crypto investors follow Pomp. You might have seen it. He posted that 17 hours ago, but that was good news for Bitcoin. That's probably what prompted the move to the upside, right? That's probably what prompted that move to the upside. But the sellers were up there licking their teeth. The S is down. I mean, it's a big down day, right? Big down day right after making fresh yearly highs. Literally the same thing occurring across the risk markets. You make a fresh yearly high, you want to see bullish momentum and continuation after you do something like that. When you stall in reverse, then it's literally just a liquidation run. Now, this asset is still structured bullish. You can see down here, it's still structured bullish, and it can pull back all the way to 43.76. And find support. Whether it does or not are two different things. You would think, a move up in jobs would be good, as that would say that, maybe a recession will take longer to get here, but maybe they're just selling the rumor and they're going to buy the news tomorrow. Because remember, tomorrow is non-farm payroll. So if we have lower unemployment, that should be very, very bullish for risk assets. But I never like to see this. I never like to see a bearish reaction like that at a fresh yearly high, right? You got one here. You can see here, this was the fresh yearly high. As right there is going to be your open on the year. Right there. So you can see up this major fresh yearly high right there. If you notice right here, you did kind of get the same thing, right? You went up, you closed above it, and then you just kind of traded sideways and you dumped. But it dumped down to support and up it went. So there you go. You also have a gap right here. I don't really care about gaps. It doesn't matter to me because the reason it's gapped is because over hours, or if you will, post-market and pre-market, it's trading through there. So that's why you have gaps. But yeah, I don't really like this. Hopefully it finds support and then continues its bullish run for the rest of the year. Has been doing pretty good, but it is also at an area where extreme selling will take place here. People basing their technical analysis on a fib retracement. Let me get this up on the actual high. There you go. So from all-time high to bear market low, you can see you're just above the 702. This is the area where sellers will, in fact, hammer down because they think they're going to see a move all the way back down in fresh yearly lows. Or at least fresh, bear market lows, 2022 lows. So it is possible. We just crossed the halfway point. So what I would like to see is just a small quarterly pullback for the next 3 months, and then the fourth quarter explode to the upside. That's what I would like to see. But of course, price will guide our hands. If we do in case start making lower highs and lower lows, we will absolutely short it. It's as simple as that. We don't love no asset. We don't care about them. We will short them if they want to go lower. I will short Bitcoin into eternity if it wants to go that way. If it wants to go higher, I will buy it. It's as simple as that. But you can see that we literally are having a rough shot of going higher. We had some really good news here, but it basically 3 weeks of doing nothing. Nothing. You made a fresh yearly high, then you made another fresh yearly high. So, and you're seeing a rather bearish reaction. So maybe tomorrow during non-farm payrolls, we'll have a range for the day and we'll be able to get long if the news comes out good. But we'll have to wait until that happens. So, but Riot was a very good call for a short, guys. Very good call. Who was it? I think it was Mr. Tom that basically said it. Yeah, it was Tom. Riot could be a short. Yesterday's high at the open. Man, what a fantastic move. 77 cents. I mean, that's a good trade. That is a good trade. $1 is a really good trade, especially if, just imagine owning 1,000 shares of that and you moved $1. What a fantastic day trade. With small cap stocks like this, when you can load up on shares, you literally don't need much. A 10, 20, 30 cent move can literally make you money. So this thing has almost dropped an entire $1. That was a fantastic call. We knew it was going to go down because Bitcoin is already down. And this thing was, it was literally up. Like before the market opened, it was up. You can see this white line is where pre-market opened. So the pre-market opened up, and then it did exactly what Tom said. Wait for yesterday's high to be taken out and get short. And boom, there you go. Look at that. I mean, you don't get any better of an entry than that. And I would just leave that position on, right? I mean, depending on how many shares you own, of course, or whatever. If you bought puts, however you took the short, you could go ahead and take profits. It's $1 move almost, right? $1 move. Take profits, move your stop to break even. And if Bitcoin continues down, you will outperform. This asset will move more than Bitcoin. So Bitcoin's down 0.9% from its open. Riot is down from its open 5%. You see what I'm saying? So this is a much bigger move to the downside than what Bitcoin has done. This outperforms Bitcoin to the upside and to the downside. So I would just hold on to that. You might have the perfect short position for the rest of the year if it goes lower. Let's make no mistake. This thing is bullish. It is clearly bullish. It's in an uptrend on the year. So yeah, it may find support. It may not. We shall see. We shall see. If it loses that trend line, then yeah, it'll probably go on down into last quarter's range or something like that. And last quarter's range on Riot isn't really much. Let's see, all the way down to 992 you could potentially get to if this short continues. And you will still be trading inside of last quarter's range. You see that? That is if the short continues. That's the big thing. We can now day trades easily by watching high probable areas, but we don't often see continuation, especially if we're taking the wrong side of the trade. And what I mean by that is if you're looking for shorts in an asset that's clearly in an uptrend, you don't typically get a lot of bearish continuation. But if we are going to see a recession, then it's not hard to say that we will see new lows. That's yeah, it can definitely happen. All right, so pound dollar looking good. It's actually red on the day, so fantastic entry there. Fantastic trade. Loving it, loving it, loving it. All right, let's see what you guys got to say real quick. Yo, good morning, what's up? Good morning, future legends, that's me. Hello, thanks for showing up. When you have a sec, could you please check a Zero USDT on the MEXC chart? Want to slowly accumulate. All right, let's see if I can find it. The Zero USDT on MEXC right there. All right. Let's see what it's done year to date. Well, it's down on the yearly open. There's your yearly opening range on a 0. And you can see it is not doing what Bitcoin is doing. Bitcoin is still massively up on the year. This is barely up on the year. So 82 cents is a good area to look for accumulation. If you drop under 82 cents and you get bearish continuation, then I would probably, yeah, just give it some time. All right, just give it some time. It's not, I mean, it's not been trading for that long. Not on the MEXC chart, so. But there's your yearly open. So, yeah. No major real resistance up there, but 152. And then you got another one at 212. They're still trading inside of last month's range, but I don't like the fact that it opened, had a nice little move to the upside, and you're dropping. So that doesn't look good. Yeah, it looks like you're breaking down. This 2-week candle closes in 10 days, sorry. 10 days, and you want to see it close above 92 cents. If it closes below 92 cents, then you're probably going to go lower. And other areas of support obviously would be the yearly opening range. That kind of coincides with this bearish candle here, and then ultimately all the way down to 66 cents. So, yeah, for the last several months, it's been trading to the downside. 1, 2, 3, 4 months straight down. That's typically not what you want to see. On the daily, this thing is going to look bearish as far as, sorry, I forgot I accidentally deleted my moving averages. So now they're on the bottom. Yeah, I mean, it's bearish. It's bearish. You got a death trap right there. Or death cross, whatever you want to call it, right there. When you see that, it's when the 55 exponential goes across the 200 exponential, that's typically bearish. So I would have been selling this, not buying it. I would have been selling the swing highs. I mean, that would have been so easy. That would have been an easy peasy trade. It's simple. I mean, at this point, even if you take back time and see where the moving averages were, you would have been able to see that 50 was getting closer and closer to the 200. So it was just a matter of time before they crossed. Would have been a fantastic place for an entry there. So yeah, I mean, it's bullish as far as it's up on the year, but that's all you got. All the moving averages tell you that this thing is bearish. Right here's where we would have got bearish. Right there upon that drop. So that's where we would have taken an entry. But yeah, we would have missed all of this, but you can't, like I said, you can't get bearish when something is obviously signaling bullish. Could have, in fact, shorted the Heath level on the weekly right there based on the fact that you closed under the 21 on the weekly right there. So you literally just bounced off the 50 on this closure right there, and you closed under the 21. So simply you could have shorted the Heath level, which is just a supply zone. All right. Just a supply zone. Look at that short side entry. Would have been a flawless victory. And now your green 50 has moved above the 21. It just means it's getting more and more bearish. Now, will they be a big spike? Yeah, because price is elastic. when the further and further it gets away from its mean or the moving averages, you will get a big spike that will stop out most of the shorts, because retail loves to short low. They don't like to short high. They like to short low. So, yeah. I mean, is it a buying opportunity? It could be, but just watch 82 cents. That's all I can tell you. If you start closing weeklies under this and you start getting bearish continuation, then you're going to have to wait. It is not a buying opportunity, according to technicals. Now, obviously, technicals don't predict what price will do. They just give you an idea of what price has done. And you typically want to stick with the trend, especially when an asset is trending. And this is currently trending. Good morning, Future Legends. KF, good morning. Hi, Michelle. Move cursor on price scale, then you will see L button appear. Yes. Oh, okay. That's cool. Auto. Yeah, also, if you just double click on this, it'll fit the screen. It'll fit the screen. All right. Double click on the price scale. But that, I did not see that. Thank you for revealing that to me. And other people that might not have known that. Fantastic stuff. Thank you, GB. Good morning, says Run Mountains. Good morning, trader, says Cassidy. Carl Heath. For your log and auto fit, you have AL pop when you scroll on the sidebar. Got it. ISM 59.2 versus 51.3. Yeah, ISM came in higher, Jolts came in lower. That's what's going on then. Gotcha. Regarding news, could it be Zappers? I don't know how to pronounce that. Power plant threat, etc. Markets dumped when it was trouble initially during the war. It could be. I mean, news will obviously dictate where market goes. People are definitely bearish. But there was a massive surge in employment. So that is good news. So like I said, today's down move may simply just be, a move lower to make everybody get super bearish just for the non-farm payroll. So if non-farm payrolls come out tomorrow, unemployment comes out good, then we should see a pop. It should pop right back up. But if it doesn't, then that just means the market's probably going to go ahead and price in a recession. I mean, we still have inversion on the yield curves. We just go to all the bonds. You can look at them. So here's your 1 month. It's at 5.1. 3 months, 5.3. Your 2 years at 5.0. And then 5 years, 4.4. 10 years, 4.0. 20 year is above the 10 year. That's good news. But the 30 year is under the 10 year. So literally you got massive yield inversions across the board. And those, at least the 3 month, 10 year inversion has typically been pretty accurate in calling recessions. And this is one of the biggest inversions I've ever seen. So I don't know. It could just be a different time. We don't know. That's why we trade the chart. All right. Yeah, it's broken down. That's for damn sure. It was definitely not a long today. You're about to hit a 1% down. You're about to take out the weekly low. Or you might have already taken out the weekly low. You did take out the weekly low. So you set a weekly high and then instantly went out and took out the weekly low. That's not usually a bullish signal. Not usually, but like I said, it could. We do see things happen. There's Glassnode. Oh shit, I gotta sign in. I thought I would have already been signed in. I just want to see if there's any. Let's just see what we got on liquidations. They have moved some stuff. I can't believe they took the 18 at the money implied volatility away. They made it a T3. I don't have access to T3 charts. I'm not going to pay $80 a month for it because I really don't even use this stuff. People want to see it, but it doesn't really help. The leverage ratio, I can't believe it's going down. That's crazy. Estimated leverage ratio usually goes up, but whatever, that's changed. Here's futures open interest. Wow, they give me more data on that. So you can see how futures open interest popped up real big on this move here. So we should see long liquidations starting to pop up. Well, we won't get today's move until tomorrow, but it'll probably have a pretty good size liquidation spike. And short liquidations, of course, didn't do much. Not as big as I would have thought. That's nothing. 8 million is nothing. Anyways, accumulation trend score, there's just a little bit of accumulation starting to fire up here. You can see you got up above 0.5. That's good. That means there is quite a bit of buying, or at least accumulation going on up here. But I'd never like to see the accumulation happen at the highs. It's better when it occurs at the lows. But just remember, all these people that accumulated here were you know, they were in the red until we got this spike, which is what another reason why I said, behold, we could see some selling up here because all these people are now into the money. Put the call ratio. It doesn't look like there was a lot of people short. It's starting to spike up. So I imagine this will spike up a lot higher. All right, I got more data on that too. It looks good. All right. So yeah, not much going on. Bitcoin just dropping. This, of course, dollars testing the yearly open right now. Jesus. That just helps our pound short. I can tell you that. Right? It helps that. That's for sure. So come on. Keep going. I don't care. We will trade it. We'll be getting it. All right. Also, BTC just made a new monthly quarterly low. Yep. Ultimate fake out could be up from here. Sweep the high and the low. Same day go higher. Could. We have seen it do that before. 30K big orders could be clipper either way. Any ideas about Bitcoin short/long? 29,850 seems like a support zone, but if it fails, then we fall to 29K. Here's the support right there. That's it. 29.8. If you lose that, then you got big problems. You could get as low as 28,707. 28,070. I mean, this old stuff could potentially prop up the market, but we wanted to see a deeper correction, right? We definitely do. This is a big move to the upside. So if we could get a pullback, I mean, you could just simply fib the range as long as it stays bullish. I mean, you could get all the way down to here, here, and here and still get a bullish bounce. So yeah, like I said, it could just simply be moving lower because tomorrow's jobs number is going to probably be good. Unemployment rate getting another tick to the downside. That would be bullish for risk assets. I just don't like it when it happens when you make fresh yearly highs. And that's a big move on the downside there. This is what I mean when I say pull back. That's what we like to see. Everything's red. Mara got crushed too. Mara would have been a fantastic short. I mean, that was a given, right? Bitcoin is dropping, and these things, there was an 8% move on Mara. Let's go back to Riot, because it's gonna continue to drop as long as Bitcoin. Oh, it's 4% down. Yeah, Mara 5 point. Nah, it's bigger than 5%. But what a damn trade. Good call out. Good call out, Tom. That was easy. Huh. That was a given. That's probably one of the easiest trades I've ever seen in my life. Because it was gapping up. AMD, please. We just kind of looked at it. It's right now 107.51 is support, and you have another support at 105.82. If you lose those two areas, then your next area of potential support would be $98 and 195. Not 195, but 95.20. So we don't want to see it lose this area. But it could, right? There's nothing on the weekly here, but we don't want to see it close under that 21 on the weekly. And if you're on the daily, you typically don't want to see it breaking below the 50. Right? Because what comes next? The 100. So if you break under this would be a buying opportunity down in here. So I like this area right there, these two areas. If you get under that, then it's going to be looking more like a sell the rips type of thing until it finds the bottom. Fiver's down big. Lucid is down huge. Space is down huge. Holy shit. Space is like going to zero. I mean, it had a successful flight the other day, and it was immediately sold off. Buy the rumor, sell the news. A lot of spot buy orders I see, so I wonder if it's futures running this down. No, futures is a way to hedge. All right, that's all it is. Futures doesn't necessarily move price. You got to look at it like this. So, like market makers, they have to, in order to provide you with liquidity, in order for you to get in, right? They are literally taking the opposite trade of you, and then they use futures to hedge. So, like if they sell you 20 Bitcoin, they go right in automatically at the same time and buy 20 Bitcoin on futures, right? So, market makers literally don't give a shit about which way price goes. It used to be a huge thing back in the past, maybe 2 years ago. You would see every YouTube video out there, market making, trading strategies, how market makers manipulate price, blah, 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 blah. It's horseshit. Market makers don't manipulate price. They hedge. They are directional neutral. Their strategies are delta neutral. That means they don't give a crap which direction it goes. So there's many different delta neutral strategies that you can run. You can buy on one exchange, sell on another, or like I said, with futures, you can simply, however many Bitcoins they sell, they go right and buy on CME. So that's what keeps the futures and spot price like the same, is market makers. They're hedging, but I would say the spot price is what moves futures, not the other way around. But yeah, when futures liquidity gets up really high, it sometimes does call market moves, like major changes in direction, right? So when you have a big spike up like this in open interest, it does tend to call different directions. So here, for instance, there's nothing happening on futures, right? Pretty much stagnant with price. Then it starts to go up and up and up and up. And then you have a move down. And then futures goes up. And then price goes down. So, yeah, it's going up. You're back up in the 13 billion in open interest in futures. That's as far as they'll let me see. So yeah, futures can see like this. It's real high, and then boom, down. So yeah, it's back up into those areas. You got to be careful when the open interest gets very high. It has a tendency to call reversals. Not all the time, though. A lot of, read that. 30K psychology, 450 Bitcoin sitting there. Yeah, but that's level 2 data. I wouldn't look at level 2 data because it can be spoofed. Level 2 data is limit orders, not market orders. So when you're looking at the level 2 data, or you're looking at the price tree, or whatever you want to call it, what you're looking at is you're looking at people putting limit orders at specific prices, right? That does not mean that price is going to cause, or that limit order is going to cause price to do anything, right? It's not, because they can delete the limit order right before price gets there. You're just looking at limit orders being applied and deleted, and so freaking many of them. It's like, yeah, level 2 data is virtually impossible to gain any sort of edge. But I mean, you say there's 450 Bitcoin sitting there, then that means maybe someone wants to buy 450 Bitcoins at $30,000. But if you get to $30,000 and price continues lower, then what? That probably means that limit order was canceled right before price got there. People used to do that in futures back in the day. It's called spoofing the order book. They would put massive, huge orders on limit, right, to try to get price to come fill them. But they would like take a short, like say at $6, and then they would put massive buys all the way down to $3, trying to manipulate price. But it still goes on in crypto, obviously, because crypto is not regulated. So I guarantee spoofing happens. Right there. So was your 450 Bitcoins filled? Did you see it actually go on the tape that it was filled? 450 bought at 30K. And it's also different because different exchanges have different order books, right? My order book is crap because it doesn't, I can't even see 30,000. We put it on the buy side. Yeah, 37.94 is as low as it goes. Yeah, this order too, this window sucks on Bitget. It doesn't show. It shows a lot of buyers at 30.08.075, but price is gone from there. Right now it's 64% bid, 36% sell. But I mean, it's a massive drop, man. This is gonna probably see some continuation. I hate to say that, but it probably is. And then again, it could halt right there. It could stop and trade sideways for the rest of the day and maybe get back up to 31 or $30,100. But it'll just look like, it would just look like this. All right. If it does bounce from here, it would be like something like that all the way until the close or whatever. Right. That's what the rest of the day on Bitcoin could look like. So just be careful watching your order level 2 window. This is objective support. So if it doesn't hold, then we'll look for lower prices. It's as simple as that. They pulled most of it. See? Yeah, moved it to 29,500. They're literally spoofing the books, man. Yeah, you don't worry about that stuff. People get caught up on it, and it literally screws with them, right? There's an actual tape that shows the market orders and orders that are filled. That's what you need to watch. And even then, it doesn't show you much. Back in the day, you could get an edge on it, but not anymore because computers run that stuff in microseconds. Like I've seen like the whole list flash green with massive size and price still continue lower. It doesn't control price. This is literally taking out this entire range of this candle. Almost. It's got to get right there, 29,813, and it will take that breakout candle out. Disgusting price action. I wish I was awake for that. I just wasn't. Having at 5 o'clock in the morning. I would have taken the short there, for sure. I mean, it's a massive level. You get stopped out or not, it's a high probable situation. You always take those. Fresh weekly lows, fresh monthly lows. Always take those, man. Fresh monthly highs. New monthly high and down. Yeah, I mean, on the month, dude, it don't look like nothing. Like, right there, you could see price get all the way down to 29.2, and it would still look like nothing. This would be a little baby candle compared to this bitch right there. Look at that monstrosity of a candle. Boom. And then it closed. That's a big boy. Still in it. We took out the lows of it for a couple months, but you haven't taken out the high of that beast yet. That's a big boy. We don't want to see nothing like that. This was a fantastic move to the upside, so we definitely want to see at least the midpoint of this candle hold. Or the open. And we don't, if it gets under that, then next area would be 23,072. Right? So we'll see what happens. You are getting a slight bounce at daily support. Just a little bounce. But like I said, it could literally just trade, stay right around this area. It is a massive level. All right. So, is there any other questions? If not, we're going to go ahead and wrap it up. We've been going for an hour. If you're just joining us, we took a pound short right here. You can see that ended up playing out great. I was not awake to short Bitcoin, so I was unable to get into it. I did attempt a buy on it and got stopped out. So that happens. But it's the first time I've eaten a stop on Bitcoin all week, and I am 100% accurate in my trades on FX this week. 100%. I have not missed an FX trade all week. Well, that's good stuff. Nice bounce from daily support. Could you buy that? Yeah, you could have, but I mean, I wouldn't be expecting any continuation. I would definitely have a profit-taking window, probably right up there. Just the midpoint of this candle would be a good area to have taken profits. But you would need a lot of leverage because it's just at under 1%. So you could have made money on that bounce easily. Easily. I should have bought it. It's too busy running my mouth. I don't even have that support drawn in on my exchange. It is now. All right. Any more questions? Oh, yeah. USDCHF. Yeah, this is going to be affected by the dollar. The dollar is pumping today, so you got a lot of sideways on this chart. I mean, it looks bearish. It is bearish. We got monthly res, weekly res there. So that's what you're looking at here. So just pretend that's your support zone. That's where you would look to be a buyer. Right? You can't be a seller here because you can see that you close 1, 2, 3 months above this price. So if anything, you would have been a buyer here, and this is what you would be targeting. Monthly resistance. Or the midpoint of this candle. Because if you're going to see continuation down, you would want to see it happen roughly on the midpoint. Which is right where it almost is. It just is. Brilliant. So, yeah. I would have been a buyer there for sure. Oh, damn it. For sure. No questions asked. Even though it is like it is, I mean, just look at that. You haven't went very far, though, have you? This thing is literally just trading range bound. There's your 4 months there. Monthly res. There it is. Just been not hardly doing anything down there. But yeah, let's go look at the currency futures, see what Swiss franc's doing. Looks like it's having trouble. This is a multi-month resistance that goes all the way back to 2014. You can see it right there. The highest close since 2014. You have not been able to get back above that. However, one thing that you did do was you did break out above monthly resistance last month. So what you would be looking for is a pullback to the midpoint. That would be an area of potential support. That's not the midpoint, but let's see if we can. Yeah, I mean, if this is a bull flag, your flag is getting bigger than your post. That's not typically how it works. So, yeah. The only way your shorts will work is if Swiss franc is stronger than the dollar. As long as the dollar is stronger than the Swiss franc, then USD Swissy will continue to go higher. It's just not going up much. It's just barely moving for multiple days here. Yeah, it's extremely bearish still, but as long as that monthly support is holding, then up it should go. Let's see here. Appreciate you as always. Cheers. Thank you very much. At Daily Res, thoughts on it? Are you talking about shorting it? You're shorting it right into support, my man. All right? Right into support. But, I mean, it's, yeah. You just tagged it. It could work. At that point, I would probably be taking profits because you're getting really close to the old resistance level, which could act as support. So this was where you would want to take profits and then just move your stop to break even. And then if you get that continuation back to the monthly support, you would want to see a consistent breakdown, and then more downside continuation, as that would be proof that you have lost that support. But, I mean, yeah, Daily Res is a good place to look for day trades. But being this close to monthly support, it would be difficult for me to mitigate that. Plus, I just don't like trading Swiss franc pairs because they're always choppy and jacked up. We've had CAD Swiss on the lookout for shorts. I've been screaming this from the rooftop since over in here because I said you're losing that bullish momentum here. So you had one final stop loss or stop run there. I mean, this short was absolutely perfect. And then if you missed this here, you could have got it here. Right? As that is Daily Res. The new Daily Res is going to be there. But now you're dropping. Dropping, baby. Do you see the trend? Huh? Yearly high, sideways, drop below the yearly open, retest the yearly open, drop. This is a simple pullback to the yearly open, drop. Love it. So hopefully someone shorted CAD Swiss. I'm long from down here, but I'm closing that position. I should have been paying more attention to that. That was a flawless short trade right there. You could have got in on it freaking Tuesday or yesterday. Beautiful short. And there it goes. I mean, it's in a downtrend. And I think I even said something about CAD. Yeah, it did. Remember, I said I could be wrong about Canadian dollar. Even though we had this nice big bullish push, it literally was just to test that. And then here it goes. So yeah, Canadian dollar weakness. It's down 66%. NZD and Aussie is down in the almost 0.75%. Big moves down. That's not good. That's literally not, like, those are your risk on currencies. Aussie, New Zealand. So when those things drop, they drop. This thing can go all the way back down to 63 cents. All right, perfect. There's a monthly support ahead of that. So this is the range here. to there. That's your range, here to here on Aussie dollar. If dollar continues strong, then I would look for it to get there. And then ultimately, there's your quarterly support. Quarterly, monthly. Yeah. It's last week's low is definitely the target. But I didn't short it either, unfortunately. But look at it. I mean, it would have been a beautiful short. If you would have been watching Daily Res. It didn't tag Daily Res to perfection, but it was close. I would have shorted it. Just like we shorted the pound. This one would have been a better short. However, the setup wasn't as perfect as this one was. It was absolutely flawless. Yeah. Yeah, baby. I don't think it'll let me go all the way back. Oh, shit. Yeah, it did. Here's that short trade I took all the way at the top. 141 was based off of that right there. I shorted it right there at that price. Stop up above that candle's high and down. I wish I'd have held that. That ended up being a big long trade. From 145 or 141 all the way down to 103. 45 cents. And that would have been massive money. Just see what the pippage on that is. I bet it's insane. Thousands. $3,500 pips. Damn. Anyways, we'll see if we get downside continuation here. We'll hold it, see what happens. Stops at break even. So if it does pop back up, it'll take us out. That's probably what happened to me from up there. I probably trailed my stop lower and it ended up getting taken out on a stop run. CAD Yen got into a short at Daily Res 109.205. Let's go look at it. Fantastic. Go, JC, go. He's saying Daily Res, or I'll say they are saying Daily Res. Literally 109.205. Had a fake out move to the upside there, but the very next day told you that it was a trap and you're getting downside continuation. Fantastic stuff. There's 2-week resistance right there. Yeah, I like it. I mean, it's calling the top. Those typically don't work, but Canadian dollar is weakening right now based on the CAD futures. The Canadian dollar all by itself. It's in an area where it literally could roll over. So hold on to that one. Put your stop at break even and just hold on to it. Make sure you do take some profits though, because that's one of the that is my number one rule. If you put yourself into the market with risk, if you enter a trade and it goes in your direction, you need to take profits because you can't predict where price is going to go. So a lot of times people will just set on it and hold it because they think it's going to go a lot farther than it will, right? And then price ends up coming all the way back out, stopping them out. Where they weren't a profitable trade, they end up losing the trade. Never let a green trade turn red. Ever, ever, ever. Do not ever let that happen. If you are in profits, you know, it's a decent day trade. You take profits, maybe stop to break even, because that 30% or 40% that you leave open, if you do catch a trend, like I did in USDJPY, that will turn into much more money than the original trade paid you. So good stuff. I like it when I see people making money. I like it when I see people learning, doing exactly what I tell them to just watch out for. And there you go. Fantastic move, man. Good stuff. Lovely, lovely, lovely. I wish I would have been awake for Bitcoin. That would have been a big one. Day trade on. Thanks for looking at. You're welcome. You didn't take it. Yeah. The dollar needs to break out or break down. Right now we have zero credibility on what the dollar's doing, right? Because it's just, I mean, this shows you that it is moving to the upside, but this is an area of resistance. So it's hard to get a directional bias on an asset when it's literally moving sideways, which it is on a yearly basis. On a year-to-date basis, you are in a megaphone pattern. That is your year-to-date chart right there. That is freaking sideways. You did make a lower low here, so what I was expecting was a lower yearly low. If we get that, then you will have a trend. But you can see I've been waiting for this thing to break down, and it just hasn't been. I actually thought it was going to on this day here. It just didn't. And you're getting a bullish continuation. Tomorrow's a whole new day. Like I said, non-farm payrolls. So we'll be live at 8 o'clock for that. We'll be live before the payrolls comes out, so that way we can get an idea of what's going on inside the daily range of these things and see if we can't get ourselves in a profitable trade tomorrow. Thank you all for being here. Thank you for your time. Oh, wait. Can you please share what time we should stay away from trading? Yeah. There, for your 24-hour markets, not stocks, but like Forex and crypto, you really want to only be looking for entries around the major opens. You have 3 opens during a daily range. A daily range. Inside of that daily range, you have an Asian open, a London open, and a New York open. You're looking to trade like 3 hours around the open. Like you can start an hour before the open and up to 2 hours after the open. After that, you leave it alone because there's going to be another massive surge of volume when the London session comes online. And for me, that's 2 o'clock in the morning. So you would be looking, if you're up during that time, you'd be looking for trades from like 2 to 4, right? Or 1 to 4. And then New York, 7 to 10 usually. 7 to 10. But, you know, the New York stock market opens at 9:30. So you could trade up until 11:30, I guess, and during the New York session. Anything other than that, you're not going to, the move is usually already happened, right? Like that's probably going to be your daily range right there on the dollar for the rest of the day. That is probably going to be your high. That is probably going to be your low. It is 11 o'clock, so there is a 60% chance of that fact. 68% chance that the high or low is in. So you can imagine just seeing 5-minute candles trading up and down inside of that range. So you've already missed the expansion. Once you've missed it, you just got to wait till the next day. All right? So yeah, you just want to stay close to the major 3 opens. And you can Google that wherever you are in the world, and it should tell you what time that is, your time. All right, and with that, we'll wrap it up. Thank you all for being here. As always, make sure you guys trade safe. We'll see you tomorrow morning. Make sure you trade smart. And as always, happy trading, everybody.